Debt is often vilified, painted as a dark cloud that looms over our financial freedom. However, it's crucial to understand that debt isn't inherently evil. In fact, when used wisely, it can be a stepping stone to financial success. Imagine this. The United States, one of the world's largest economies, operates with a staggering consumer debt nearing $15 trillion. This figure may seem daunting, but it's a testament to how integral debt is in our economic fabric. Rather than seeing it as a life sentence, consider it a tool in your financial arsenal. Think of it this way. If you borrow money to invest in an education that leads to a high-paying job, isn't that debt an investment in your future? The key is to discern between crippling debt and strategic debt, the latter being a catalyst for growth and prosperity. 1. Harnessing debt for business triumphs. When it comes to business, debt is not just a necessity, it's an art. Successful entrepreneurs and business moguls often leverage debt to fuel their ventures. It's about understanding the balance between risk and reward. Let's take the example of trade. Many businesses, especially traditional ones, rely heavily on borrowing to get off the ground. Consider an aspiring entrepreneur looking to import goods from overseas. By negotiating terms with suppliers, they can secure inventory without immediate payment, paying only after selling these goods at a profit. This strategy doesn't just conserve cash flow, it exemplifies smart debt management. It's about maximizing resources while minimizing upfront costs, a fundamental principle in the world of business. 2. Real estate, building wealth through leveraged debt. Real estate stands as a prime example of how debt can be an ally in wealth creation. Here's a scenario. You spot a property with potential, but it needs work. You secure a mortgage for the purchase and allocate funds for renovation. Post-renovation, the property's value skyrockets. You then refinance, pulling out more money than you initially invested. This isn't a tale of debt dragging you down. It's a story of using debt to build equity and passive income. Moreover, the mortgage interest deductions on taxes are a cherry on top. This strategy is not just about buying property, it's about smartly leveraging debt to turn a decent profit and grow your wealth portfolio. 3. The strategic play of hedge funds. Hedge funds, the playground of the affluent, where debt becomes a game changer. These funds often employ strategies that seem counterintuitive to the average investor. Take short selling, for instance. It involves borrowing a stock you anticipate will drop in value, selling it, and then buying it back at a lower price to return to the lender. When executed correctly, this strategy can turn a substantial profit. However, it's not without risks. If the stock price rises, losses can be significant. The lesson here? Debt, when used strategically, can be a powerful tool, but it requires knowledge, skill, and a bit of audacity. 4. The Forex market, leveraging currency fluctuations. In the realm of Forex trading, debt takes on a different face. It's about leveraging small amounts of capital to control large positions in the market. For example, with a one leverage, a $1,000 investment allows you to hold a $100,000 position. This amplifies potential profits. A 1% gain on a $100,000 position means a $1,000 return on your initial investment. But as with any form of leveraged debt, the risks are equally magnified. Forex trading exemplifies the high-stakes, high-reward nature of using debt in financial markets. It's a world where astute predictions and calculated risks can lead to substantial gains. 5. Credit score, the gateway to favorable debt. Your credit score is more than just a number. It's a reflection of your financial trustworthiness. A high credit score opens doors to lower interest rates and favorable loan terms. It's about building a reputation as a reliable borrower. Banks and lenders are more inclined to offer better conditions to those with a solid credit history. This means access to capital at a lower cost, essential for both personal and business growth. The takeaway? Managing your credit well is managing your access to beneficial debt. It's a critical component in the financial toolkit of any savvy individual or entrepreneur. This way, we can conclude that in the entrepreneurial world, debt can be the fuel that propels your business forward. It's about leveraging borrowed capital to turn your vision into reality. Consider the tech giants of today. Many started with substantial loans or venture capital. This isn't about recklessly plunging into debt, it's about calculated risks. By borrowing to invest in research, development, or marketing, you can accelerate your business growth far beyond what would be possible with limited personal funds. The idea is to use debt to create value, transforming it from a liability into an asset. There's a prevailing stigma around debt that it's a trap, a burden to be avoided at all costs. However, this mindset overlooks the potential of debt as a strategic tool. The wealthiest individuals and corporations understand this. They don't shy away from debt. They embrace it as a means to amplify their wealth. It's about shifting your perspective, viewing debt not as a weight but as a wing, enabling you to soar to new financial heights. With the right approach and understanding, debt can be an integral part of a prosperous financial journey. Just as investors diversify their portfolios to spread risk, savvy individuals and businesses diversify their debt. This means not putting all your financial eggs in one basket. It's about having a mix of short-term and long-term debts, secured and unsecured loans, each serving a different purpose and offering varying degrees of risk and return. Diversifying your debt portfolio can help you manage financial risks more effectively, ensuring that your debt works for you, not against you. Now, talking about debts in the digital age, the digital revolution has transformed the way we approach debt. Fintech companies are redefining lending, offering more accessible and flexible borrowing options. From peer-to-peer lending platforms to online microloans, the digital landscape is brimming with innovative ways to manage and leverage debt. These platforms often provide quicker, more personalized lending solutions, tailored to individual needs. This shift towards digital lending is not just about convenience. It's about opening up a world of opportunities for those who were previously excluded from traditional financial systems. Besides that, debt can be an investment in your personal and professional growth. From student loans to personal development courses, borrowing to fund your education or skill development can have long-term payoffs. The key is to invest in areas that will enhance your earning potential. This approach to debt is about envisioning a brighter future and using borrowed funds as a bridge to get there. It's a strategic move to elevate your career prospects and financial stability. As we conclude our exploration into the art of mastering debt, let's summarize our understanding of why this journey is not about avoiding debt, but about its wise utilization. Imagine debt as a sophisticated tool in your financial toolkit. When used wisely and strategically, it can be a powerful lever for achieving your financial aspirations. But how do we differentiate between reckless borrowing and strategic investment? This is where financial literacy becomes crucial. It's not just about knowing the numbers, it's about understanding the principles behind them. Knowing when to borrow, how much to borrow, and at what terms can make a significant difference. And let's also talk about discipline. It's one thing to understand the theory behind debt management, but applying it consistently in our lives is what really counts. This means making informed, deliberate decisions about spending and borrowing, keeping in mind our long-term financial goals. Now, consider the importance of being fully aware of your financial situation. It's like having a map when you're on a journey. Knowing your income, expenses, debts, and assets, this knowledge is power. It's the power to make informed decisions about using debt to your advantage. Debt should not be a shackle, but a stepping stone to opportunities. Wisely embracing debt can open doors to wealth creation, investment, and financial freedom. It's about turning what many perceive as a liability into an asset.